Hi, my name's Ryan from Blockstocks.com. My website is focused on ways to make passive income in various ways. If you click on my menu, you'll see different ways that you can do that. But this video is going to be on covered calls, making money on stock you already own. So if you click here on the menu, and you're going to scroll down to stock market analysis, we've got several tools here that could be of some use to you. The indicators on my chart that I'll show you in just a moment are from this website right here, simplertrading.com. And what they do is they offer training and live alerts, live trade alerts on options trades that they take. And so if you click this link, it will actually offer you a discount on their service that you can cancel at any time, as well as the indicators that I'm going to show you in just a moment that help you, or at least help me, figure out how and when to place a trade. Let's first go over some basics about what a covered call is, how it makes money, and how the trade is placed. So a call is something called an option that you sell against your own shares. And in order for an option to work, it has to be for every 100 shares of stock that you own. So for every 100 shares of stock that you own, you can sell something called a call option, and it makes money so long as the price of the stock stays below a certain level called the strike price. On my chart here, I've got lots of colors going on. Seems kind of confusing at first, but I found that these tools are extremely helpful. Looking at the actual stock chart itself, I've got these red arrows that seemingly point to wherever the stock is turning down. So as I said, covered calls work when the stock stays below a certain level, and knowing when the stock is turning down is a good entry point for placing a covered call. In this example, we're using Kroger. I'm not saying buy Kroger, I'm just using it as an example. I've got some other tools here that help to measure various things. So let me first talk about this arrow here. This is called a low over high bar, meaning that you've got a bar that goes to the top here, and then the next candle will close below the low of the previous bar, indicating some kind of reversal. So knowing that would be a good entry point to sell a covered call at this point here. A different kind of indicator is a momentum indicator, which is what this is here. It's called the Squeeze Pro. And again, this is another way to check when a stock might want to turn down because of the loss of momentum. So for example, if you see where this matches up with the chart, the momentum is positive, meaning it's going up, up, up. And then what happens at this point is you're actually running out of buyers who are willing to buy at this price level. So then, since there's less buying pressure, the price wants to start to drift down. And then you get people who want to sell or take profits, or people who are short selling, and it drives the price down. And so what happens is, especially in this area here, you're getting short sellers or increasing negative momentum, driving the price down to support levels. In this case, the support level is this blue line, which is, I believe, the 50-day moving average. And then lastly, I've got this one down here. This is called the Ready Aim Fire. And again, it just tells me, this one I elect to use to indicate buyer exhaustion, meaning no more buyers, and seller exhaustion, meaning no more sellers and thinks something wants to reverse. So they're kind of, in a way, kind of telling me the same thing, but it helps to kind of look at all of them to get an idea or confidence in placing the trade. So let's look at an example of setting up the actual trade. First of all, let's look at this here. So at the current level, at the time of this video, this stock is still moving up. And I'm not getting any indication right now that the stock wants to reverse down. So right now is not the time to place a call because the trade still wants to go up. So we're going to have to look at a previous example. Let's look at this here. This here, you see that there's buying pressure, people buying, and then at this point, and it also peaks out here on our momentum indicator, the squeeze, that we kind of run out of buyers, and so the buying pressure lets off. This arrow here is a good entry point to go ahead and sell a covered call. So we're going to now look at the options chain. When you look at the options chain, some stocks will sell calls on a weekly basis. So this, at the time of this video, this is the near term, this is 2 weeks out, and this is 3 weeks out. On the near term or same week expiration, we're not really getting a lot of premium there, maybe $35. And then if you go out another strike level, $20, which it is money, but it's not a lot of money. So what I'd like to do is go out at least 2 weeks and then sell the premium at least 2 weeks out. And that way I have a little bit more to choose from. You could even go 3 weeks out and make a little bit more money. Now keep in mind here that if your shares are assigned, which means that your strike price becomes in the money. So if I show you this here, let's say that the stock goes up to 40, then your shares can be taken away at $40, even if the shares go up to $41. So you want to try to avoid, if possible, your short or sold call becoming in the money. So you want to sell something sort of out of the money, which is maybe up here. So I'm going to move this back into the frame focus. Now there are some stocks that have just monthly calls, so let me show you an example of that. This particular stock only has monthly calls, July, August, and so you have a little less opportunity to make passive income. So I like to choose stocks that have weekly calls. So I'm going to go back to Kroger, and now what we'll do is we can sell a call on Kroger. I'm going to go back to the chart just to get an idea of how high I think this might go. I'm going to go to the daily chart, and now this is a new high, so it's hard to gauge where it might top out. So there's two ways I can do that. I can either wait for this kind of down signal to occur, and that would be the easy way to do it, or I can attempt to forecast where the top might be. And one way to do that is with previous lines of support and resistance. So I'm going to show you what that looks like, and this is an indicator that you can purchase at simplertrading.com. Let me just move this over so you can see what this looks like. In this other chart, these horizontal lines, they are called Voodoo Lines and are an indicator that you can purchase at simplertrading.com. What they are historical levels of support and resistance. So if I kind of squish this down and magnify just this area, we can see that the next area of resistance past this level is going to be this level, maybe 40.5. So if I can sell a call at 40.5 or higher, there's a good chance that my short call will not be in the money. There is another way to do it, and I'm going to show you that right now. So another way to attempt to predict where a stock might top out is something called a Fibonacci retracement. What that means is Fibonacci is a mathematical equation that predicts order in some way and proportion. And for some reason, stocks somewhat follow this order of proportion. So what you do is you go over here, you're going to go here to down here to drawings, and it says here Fibonacci retracement. So you click that, and then you're going to draw a point from the previous high to a previous low. And so I'm going to use this high here, and I'm going to use this low here. And what it does is give us this proportion of where things might stop. And so the next level of resistance, according to this Fibonacci proportion, is $40.28. And if you remember, on our previous chart, it was $40 and I think it was 50 cents. So let's go back to the options chain and see where that might land us. So on our options chain, 40.5 seems to be the way to go. That matches both of those predictions. On the 2-week options chain, at 40.5, we could sell that and make, it's saying making $39. You could do that, and you can do that maybe twice in a month. Let's see what the 3 weeks out looks like. That would be July 9th at 40.5, which is this one here. So at this level, which is 3 weeks out, we can make about $50 or $51. And you can make $51 for every 100 shares of this stock that you own. So for example, if you have 200 shares, then that would be $100, and so forth. So it helps to have the price of the shares in the range that you can buy multiples of 100. So the range that I like to focus on is between $25 and $50. That way I can even use margin to purchase multiples of 100 shares, and then look for a top or predict the top, and then that would be an entry point for once it hits that level or comes close to hitting this level, we can either watch for the arrow as a reversal indicator, or I can in a way guess or bet that the price will want to reverse against this level of support. And that would be my entry point for selling a covered call on however many shares I own in multiples of 100. So you're going to sell one contract for every 100 shares. So if you have 200 shares, you can sell two contracts, etc. And you'll make $50 or multiples of $50 as passive income. And I have some good news for you. You can do this using a cash account, but that limits how many shares you can buy. You can also do this in a margin account. You can buy stock on margin and then sell calls against your stock. You just want to make sure that if you're buying stock on margin, that you have enough cash in your account to meet your margin requirement. If your cash falls below your margin requirement, then what happens is you get a what's called a margin call, which means you have to deposit money to bring your balance back above the margin requirement. It's kind of a pain in the butt to scramble to deposit money to meet the margin requirement. So I would say, just make sure your cash stays above your margin requirement. You should be able to find that in your account information. One other piece of good news for covered calls is you can actually sell covered calls in an IRA. So what happens in an IRA is, so long as you hold the stock more than 1 year, any appreciation in the asset, let me show you this chart. So long as the asset goes up or appreciates, so long as you hold the stock more than 1 year, that will be taxed as a long-term capital gain, which is lower than a short-term capital gain. However, when we go to the trade tab, this option that you sell and then buy, and I'll go over that in just a minute, it's held for maybe a few weeks to up to a couple of months. And because it's less than 1 year, any gain such as this $50 is taxed as a short-term capital gain, which is higher. It's taxed at a higher rate than a long-term capital gain. So just keep that in mind, that money that you earn can be taxed, but it's still free money on top of your existing shares.